Welcome back, traders and investors. We're lucky enough to have Rahul Sharma on here, Managing Director at Neev Capital. He brings 16 years of investment experience in different global roles. Rahul, how you doing this morning?
Yes, good, thank you.
Okay. Boy, these retail sales have been the earnings from these stores, these retail stores are just all over the place. But the high end seems to be coming through with the Tiffany's and now the Williams Sonoma today. Do you expect that trend to continue?
Very much so. And I would say actually it's not just all over the place. I'd say for the most part, retail earnings have been ugly. And I think the ones that are standing out, I think two or three things. I think first of all, this is a quarter, I think, and we saw this over Christmas as well, but very clearly this quarter, how important the internet is, in terms of just making people go elsewhere looking for value. If you don't have something that people like, so if your product isn't exclusive, if you're not selling to an upscale consumer, and if you're still wedded to the old ways of selling largely through stores, you had big problems in the last quarter. If you didn't, if you had exclusive product, Williams Sonoma, Tiffany, but you don't have to go all that upscale, limited brands. Victoria's Secret had a very good quarter as well. So again, it comes down to the right product delivered how she wants it conveniently.
What about Coach here? If we look at this one, it was the first one to report, and it disappointed actually, and the stock went down here. And then you get Tiffany's going up. So why did Coach not do well there? Do you think there, Rahul?
I think there's a bit, it's very easy, and a lot of people like to call Coach luxury. I think the in some ways the worst kept secret in luxury is Coach is not a luxury brand. It does not correlate well to Tiffany at all.
Really?
The
Really?
bulk of Coach's sales come from factory stores. A lot of this product is sold heavily discounted, 40-50% off, and that's more than half of their sales, not their full line. And the other thing that's happening with Coach is it's been for so long, it's been the biggest handbag brand in the US that it's starting to mature a little bit. So what you're seeing is younger, fresher brands like Michael Kors, like Kate Spade, like Tory Burch, really eating them for lunch because there's much more newer, fresher marketing, newer colors. People just getting a little bit tired of the Coach brand, I think.
So you think Coach just continuing to kind of maybe meander down here, or do you think eventually we're going to find some level where the buy the dippers come in on this thing?
Well, I think it's still some time off. The problem with a brand that goes into decline like that is very hard to call a turn in that because there's it goes well beyond just simply something that somebody can come in and financially fix. The problem is the image is kind of impaired. People start to see it as a little bit more dowdy. And I think the fact is, it used to be the granddaddy of the market, has the market all to itself, and there's a lot of newer people in there, Core, Spade, all these guys, and therefore I think it gets tougher and tougher. So eventually, absolutely, the thing generates a whole lot of cash flow. That's not going to go away. But the sheer pace of decline, sort of double-digit sort of comp store declines are a little bit scary.
What about we got Dollar Tree earnings, like just switching it up here into some of the discount retailers, and DLTR actually their report was pretty decent here this morning, 67 cents versus 67 cents, and 2 billion versus 2.01 billion. They did narrow the guidance, but the stock is lifting here, $2.50 in the pre-market here. So we do have a discount retailer here doing okay. You think these dollar stores might start turning around?
I think they're doing a whole lot better than everyone else, and some of this has to just do about the retail tape we're talking about. Earnings have been so horrible that a relatively inline report from Dollar Tree, where it's comps at
Right.
2%, nothing to write home about, but and I'm frankly much worse than 2 or 3 years ago, but still a whole lot better than Walmart or Target, for example, who are just about flat with margins down. I think it's quite a good report and kind of shows the dollar stores are still doing a whole lot better. The valuations have come down quite a lot as the sales have slowed. So I think, yeah, they're actually really interesting.
Okay, talking about your internet theme there a little bit. Boy,
Yeah.
Amazon, man, that thing is just falling off a cliff here. It seems that the Momos, some of the Momos have come back, but not Amazon. What's your outlook for Amazon?
I think, look, Amazon is becoming a bigger and bigger part of everyone's life. I think that there is no denying. I think the reason why you're seeing some of this carnage on the high on in the mall is largely down to that. A lot of people think I can get this on Amazon, that on Amazon. I think PetSmart was the latest yesterday, which seemed like pet foods was a really protected category, and suddenly, hey presto, they're starting to see their sales fall like Best Buy did. So I think Amazon becoming a bigger and bigger factor of life. I think you have to recognize that to some extent in the valuation. I think it's all down to I think the business is doing fine. They're going to keep saying that we've got lots and lots to keep investing in. But it does feel like a lot of people want to now see a bit of a turn. They want to see more returns. They want to see more profit coming out of that business. And I don't think Amazon is in any mood to show that. So I think that's kind of continuing to be your problem there. I think the business is fine. So that focus on continuing to invest is just starting to put off people now.
Let's move on to some of these apparel retailers there. Looking here this morning, we had, actually last night, we had Al Brand's report there, and they're not trading very actively. They kind of came, same store sales plus 2%, 53 versus 52. So they did lower the full year outlook just slightly there. The stock's just kind of hanging out, but we've had some of these other smaller apparel retailers like American Eagle, Outfitters yesterday, actually Citigroup coming out and downgrading them to sell. So some of these, mall retailers for the apparel haven't been doing well here either. Do you see any of these this sector turning around here at all?
I think you have to be very careful with apparel, and I would call L Brands or Victoria's Secret pretty much a winner because, again, it has the right kind of product. It basically dominates its niche, and someone like Nordstrom, which again has a slightly more upscale mix of people in its portfolio. Importantly, both these companies are much further ahead than anyone on embracing the internet and being able to sell more conveniently. Everyone else, I think, unfortunately, or most of the other companies, the problem is there's no definitive fashion trend out there. That's not helping all these people. For the last few years, you had a big trend towards color in the mall. That induced people to go into the mall and buy. And now there's just a whole lot of other competition for your dollars. I mean, people seem to be much more focused on the home. Look at Williams-Sonoma, look at Restoration Hardware. I just think there's not enough money spent left for apparel, and there's way too much stock, and the weather isn't helping. So I just don't see things turning around anytime soon.
What about just looking up and just going one more children's retailer, which we haven't talked about here this morning, Children's Place Retail Stores, PLCE. Do you look at that company at all? They reported a pretty decent quarter here too, and it is actually bouncing $4 here this morning. It went out at 45.49, is now up at $50 here, up 10% here. They reported 68 cents versus 61 cents. Do you think this Children's Place thing, is this something you like?
I mean, it's not one I've looked at closely in a while, but it tends to bounce around a little bit. I mean, they tend to go around some of this where they have one great quarter, one really bad quarter. I mean, kids' clothing as well, you've got to remember, is hugely value-oriented as well. A lot of people realizing that they want to buy as cheap as possible because kids tend to grow out of clothes really fast. And when you're sort of cash-strapped, when, that becomes an increasing factor. So I think, frankly, right now, anything you see with these companies, anyone who comes up with a half-decent quarter right now is going to be a hero because so few companies in retail have done well this quarter. But I just do wonder about the sustainability about the likes of Children's Place. I think the past track record kind of tells you something. Something not very nice is happening with that category.
Okay, and just moving on to some of these big shops. Target's just been under pressure here. They had the breach of the credit cards, and the CEO leaves here. They're having problems over in Canada. I guess you Canadians don't like to shop at Target, huh, Dennis? And just not a good-looking chart here. So you got your what's the best of breed here? Target or your Kohl's, or Walmart?
Out of the big ones.
Yeah, out of the big ones. I mean, well, we could go into Walmart too, but that's a little bit of the lower end. Where's your pick in that sector?
To me, I mean, and again, it's generally I would have to go with Nordstrom or Macy's. Now, again, they're at the slightly higher end of that, have a much bigger direct business than anyone else. I think everywhere else, unfortunately, and the reason why is, again, both these companies are much further forward in terms of the internet. They have much more exclusive product and a slightly more upscale consumer. I think everybody else, unfortunately, we talked about Amazon before, is at the risk of getting intermediated out by Amazon, or the whole big sort of non-food sections of these stores are struggling because they're struggling to compete on price, be it Target, be it Walmart. The clothing side has other issues, electronics. We kind of saw that Best Buy's report. The category is not great, and then the internet is taking away a lot of the volume. I just don't think things feel very good for most of the big boxes, and people don't like big boxes the way they used to anymore.
What about that big box pet store? J-Dot's asking about PetSmart here, and it got murdered yesterday. Lost $7 there on their earnings report. It's just trading flat here this morning. You got any thoughts on PETM?
I was very surprised by PetSmart because, to me, to some extent, I thought that would be one of the winners of this because people still like to pamper their pets, and PetSmart has quite a lot of product that nobody else sells. So you would think it'd be a much more protected franchise than many of the other stores. What surprised me about PetSmart was how quickly kind of comps have gone from being in that consistent 3-4% range to basically down. And they're saying comps are going to be down, coming up as well whenever everyone else in retail is saying things are looking up a little. That tells you something secular is happening there. And again, unfortunately, I think it's the internet. More and more people getting comfortable buying volume stuff on the internet, volume pet food on the internet. And when you've got 10% margins, you start to look a little bit vulnerable, especially because I think PetSmart's biggest problem is it's kind of ignored the internet. It's kind of said, this is going to be a small piece of the market. And they're suddenly rudely waking up and thinking, no, we need to do something about this. We need to invest behind this fast. So
Just
I think there's a little bit more pain to go there.
just real quickly, the S&Ps are moving up here, Dennis, but so is gold. Gold's now over 1,300 here.
Wow.
1,304. We're busting out 1,315. Next level to look at. Okay, Raul, so you see the retail earnings. The high end looks good. Everything else looks bad. The Fed's on hold. Do you see any implications from this quarter's results and from the retail stores? What does this have you thinking about the overall market, the economy, and the whole shebang?
I have to say overall that, if you look at these retail earnings, I think it tells you the consumer's not in a great place. But again, it's not. He or she is not in as horrible a place as most people actually make it out to be. I think retail is particularly coming up, having a rude awakening to the fact that the internet is square and central to how we shop. That's why some people have done really well, many have done really badly. I think that's the reality that you have to take away. The consumer is sort of chugging along, not great, not terrible, but for these retail companies, I think if you have the internet, you're winning. If you don't, you're toast.
Okay.
Speaking of retailers on the internet, before we let you go, we do have an IPO today, JD.com, the Chinese kind of Amazon type over there. Do you follow that company at all? And do you have any thoughts? They're coming out here. It looks like an IPO price. They priced it at 19. The original range was 16 to 18. Do you have any thoughts on this IPO?
No, particularly. I mean, I think the only thing I would say is it's one of the world's biggest markets. What you're seeing in China, I think, is even more accelerated than the US. Remember, real estate in China is really expensive. So a lot of people piggybacking, even before you go in through stores, the internet, people are adopting it just because it's so expensive to build a physical store. And JD pretty much is the Amazon of China. They have a tie-up with Tencent, which gives them a lot more sort of visibility, even ahead of Alibaba, I think. So, I think you are going to be paying a bit of a premium for that compared to everything else. It's priced at a premium. I think that showed up. I think they'll probably get a little bit more of a break than Amazon. Still don't make money, but they're still a bit earlier in terms of investing, into the business than Amazon is. So they might get a bit more of a break for that.
Okay, we've had Rahul Sharma, Managing Director at Neev Capital, coming in and giving us an excellent outlook on the retail market, retail sales. Thank you so much for coming in on short notice here, and we'd love to have you back again.
Lovely. Thank you.
Okay, thank you, Rahul.